Hello, everyone. Good morning, good afternoon, and good evening. So today, after a nasty red day, and looks like we are getting a gap up, and could it indicate that this is gonna be the continues the chop, the market that we have experienced in the late November and December last year? Would be an interesting day. Um, I'm still focused on the short side, but I am open to any outcomes, any direction the market would like to go, because it's getting up into a pretty interesting level. The anchor VWAP and the 9 and 21 EMA daily chart. SPY is still above the 9 EMA, still doing pretty good. And IWM is gapping up into the declining 9, but the weekly I think is still very strong, and it's the strongest among all the three indices. And the strong Russell um generally would lower the odds of getting a uh more than a 15% correction in the Qs and the SPY from the historical data. But I'm not going to it's just a reference, not going to take it as a reason for buy or sell. And but yeah, we're getting a decent gap up, but a lot of them is gapping up into the declining EMAs and the resistance level. That is interesting. Gonna be maybe a bit more careful today uh, on the short side. I'm not going to. I think not gonna skip the first 30 minutes, I believe. Hopefully the market is not like directly fading from the open. And even with the gap up, like some of the weaker names are still like quite far away from the 9 EMA. So let alone the 21 and the 50. I think it's still too early to say which direction the market would like to go, even with a strong close today, or maybe even tomorrow. And we'd like to see how the stocks react to the declining 9 or the 21. Yeah, but I mean any gap up into the declining EMAs will be a level to focus on the short. That's my take. We'll see. Like A-Lab is like gapping up into the 21, and also the declining 9. I think today is a really good entry for the short side. But we'll see. Hopefully I can catch the entry if there's any. I don't know whether I don't know whether should I play for the opening range lows. Maybe only for A-Lab. Actually, Nebius and Lights is also could be a good entry today. We'll see. I think that's all for the trading today. I kind of like to on shorting this Western Digital, but I think I've already got MU and SNDK, then it's a little bit too much exposure on the same sector, especially on the short side. So I think yeah, definitely I think it's a good entry. I think it's a but not the best one because it's not it's now above the 9 EMA. So I'm gonna probably avoiding trading this one. And today the software name seems to be leading the market, and I just saw a lot of breakout across many software names, and they're looking pretty good so far. Yeah, so probably I think maybe the market needs a bit more time to, I don't know, really pick a direction to go. Stops me out again on this light. I'm still kind of like it. I just think I'm gonna keep trying this thing. Let's see how many times it's gonna stop me out. I really like today's. I like this pushing into the 50 EMA during the stage 2. Like this surfing the 50 EMA for the whole year. This is the first bounce into the 50 EMA after the it loses the range that it built in May and June, and it's like a breakdown and then a retest. I can't really find a good example, but I don't know. Like from my knowledge, from my understanding, I think the first bounce, no matter if you are doing shorts, that will be the first bounce, and if you're long, the first pullback into the 50 EMA is a really good entry on the pullback buys or the pullback longs, especially like for a stock that is like paying a really high degree of respect in the previous price action. And yeah, I'm willing to like take a few tries if I really needed to, and until the market or lights just proves me wrong, and then it goes, I don't know, like keeps going higher and have a really strong intraday. Palantir is really strong, but IGV is at a interesting level in this lower time frame. So at the 60 minutes and like the 15 minutes EMAs, they are clustered together. But yeah, if it holds, like, it looks really nice. And the leaders of the software names may be like could take off from here. There's a really strong undercut reclaim from Palantir. It looks like the market is finding support so far. Gonna be a little bit patient here. Could go both way, I think. But I would be a little bit mad if the Palantir find resistance and then starts going down from here and print a really ugly, like a candle with a really long upper wick, and that would be brutal. But so far, only strength. Crowd is approaching the previous candle high, the all-time highs, where it found some resistance a few days ago, and all the software names are looking pretty strong. Yeah, but I'm going to like stick with the plan and focus on the short side instead. I don't know if like Palantir really start going lower from here, that I will be, I don't know. I think I feel like I'm a little bit over trading, but I don't. But I think is it worth it? I don't know. I think I'm gonna skip this one. If it goes down, whatever. Maybe there will be a better opportunity at the 9 or the 21 EMA. I mean, after it really loses the 60-minute EMAs, if it really starts going lower and then I've been waiting for the pullback into the 9 or 21 would be a better play. But I don't know. Feels like IWM becomes the weaker index since it rejects the 9 and 21, while the QC is still above them. Yeah, I mean, kinda, but I think Qs and IWM are pretty identical from the in the past few days. Maybe since the Tuesday gap down. They both bounce into the declining 9, and then now they're below. They're below, and not sure. How do you enter trade so fast? First, I think is you need to like calculate your position size like a bit in advance, so you don't need to manually calculate it during the market hours when you're really doing your trades, like executing your trades, and find a good timing. And yeah, first, for example, if you got a 10K account, 0.3% of your equity is like $30. It should be like that. It actually depends on your stops. How wide is your stop? And let me pull up the calculator. Yeah, so let's say you got a 10K account, and then you're using like 0.3% of your account is the risk, and if your stop is 1%, and that it will be divided by 0.01, and that will be like 3,000. 3,000 bucks is your position sizing. So when your stop is around 1%, then you know you are gonna use like you're gonna buy or sell like 3,000 bucks of the shares. And if your stop is around like 1.5%, so you're gonna use like 2,000 bucks as your position sizing. So anywhere between like 1% stop and 1.5% stop, then it will be like I will be doing maybe using the 2,500 or like anything between 3,000 and 2,000. And if I'm using a wider stop than 1.5%, then I would just use maybe a smaller sizing, maybe 1,000, 1,700, 600, 500, etc. And I'm using IBKR, the TWS platform, and it allows like it automatically calculate and show your position size after you enter the number of shares. So it really helps me to like calculate how much or how many shares that I should buy or sell. And if you like do this type of calculations for a few months or even years, then you can do this type of calculation really fast. And no, I don't use any short key. I just manually pressing the buttons. Like I believe like doing manual or mental calculation or doing it manually is actually faster than using the other indicators or like scripts, etc. Maybe it's not faster, but it's already fast enough, and it's less hassle free. You don't need to like find the one that really works, and it's not that difficult to do it manually. Do you attach stop loss or buy or sell first and add stop loss later? I entered my stop order right after my entry. So after my entry got filled, and then I put my stop orders right after it. For stop losses, do you use stop limits to get out of during extended hours? You can, if you're here during the open, you can see how I got stopped out on light and Napiers at the open, and you will find out the answer. You only use market orders instead of limit orders when buying and setting stop losses, right? I think 90% of the time I'm using market orders when I'm doing an entry. Occasionally, I would use the limit order, maybe for fun, and maybe for a stock with a larger spread and less liquid. And for the stop losses, yeah, they are all like market orders. I never use the stop limit orders because you really want to ensure your sell orders is gonna get filled when you hit your stop price. And I think it's important to add some some kind of variance in the trading routine. Like sometimes I just want to use the limit orders really for fun, because if I don't want to be I don't want to trade like a robot, and I think like using a limit order rather than a market order doesn't make a huge difference in the long time performance, and I think it helps you to this type of more details actually keeps you in the game. But generally, when I like for a day with that many opportunities, probably I would be just use the market order instead of manually typing in the limit price and then finding the best price that I should set. If you're shorting Napiers, why don't you use leverage products such as NBIZ for 2x shorts? Our first one is this ETF. This ETF is not really that liquid, and second, I think the underlying stock, like the Napiers, is already volatile enough. Like it is a really fast mover, and I think I don't need to use the 2x leverage ETFs to really capture the move. And I don't know whether it's a valid reason or not, but definitely the main reason is the low liquidity. And the third reason is easier to manage the position, because if, for example, if I'm doing like the SQQQ, I have to switch to the underlying the charts of the underlying assets, which is the Qs. And so if I have several inverse leverage ETFs in my portfolio, then I have to track a number of the underlying assets, the underlying stocks. That I don't like it, and yeah. And also for fun, I just love shorting stocks instead of buying the leverage short ETFs. Oh, got stopped out of SQQQ. Could you share how do you handle slippage if you only get out during market hours, especially if the stock gaps up and down against you? I mean, I think you're talking about the gap up or gap down instead of the slippage. Maybe the slippage is about the difference between the open and my stop price. I would say it's part of the game, and you get a gap down, and then you could get a gap up too, and I don't find gapping up or gapping down really destroyed my performance by a lot, and it's not really happened that frequently. Or if it did, it's only like a small gap up or gap down, like Napier's and Lights did. It's probably only like 1%. So it's around double my original risk. So I think it's manageable. And yeah, I think you can't really like completely eliminate the gap up or gap down risk, even if you set a wider stop loss. But because the stock can definitely like let me find an example. Um, I don't know. I mean, let's say you're shorting QQQ on this day, but it's a little bit of like extreme example. Okay, I think here maybe let's say you're shorting Q on this day, maybe like on Thursday at the 9 EMA, and either you set your stop on the high of this day or I don't know, like kind of above maybe the high of the previous swing high, then the gap up is still a gap up. Like the setting a wider stop, I think doesn't really help to reduce the risk of a gap up, and the stock can like can close maybe slightly below your stop. I think that like the risk of getting a gap up or a gap down is definitely the close is really close to your stop level. But no matter you're setting a wide or tight stop loss, you're gonna get a I don't know a similar chance of a close near your stop price. But maybe not. But I just doesn't think it matters a lot. What is your opinion on current market condition? Like software names so strong and semis are breaking down. Do you also look for some long positions, or you generally is on bear bias for short term? Um, yes, I think I'm a bit bear biased, but I'm still like trading what I see. I'm just seeing a lot of stocks gapping up into the declining EMAs after a huge rally, and showing some volatility and some huge volume candles in near the top, and I don't see it as a healthy action, and I just doesn't like it. But at the same time, I think the software names are holding up really well, and then now it's like it's still serving the EMAs, and I believe there there's no like really correct play. Like there could be more than one uh model answer in the market. You don't really have to be bullish or bearish to be profitable. I mean, if you're in the right stock, I think no matter you're doing longs or shorts, you can still be correct. You manually search in TradingView for stocks that make a big move, or you bought stock data and analyze them automated. I do it manually, and I believe doing it manually has a big advantage, which is like you can really see the big picture across different sectors of different stocks of, in different sectors, and you have to filter out all the charts that you see, and the process of filtering different stocks actually helps you to analyze the general market condition. Looks like we're getting a really choppy day, and still no clear direction. But IWM is kind of weak, and it's below the 60 minutes, like 50 EMA. Like Q is doing quite strong. Try to break out from the opening range highs, but we got a gap and an unfilled gap right above it. Where did you go to vacation last week? I went to Malaysia. What time of this session is your average entry? 30 minutes prior to open or later in the section? It really depends. I think it depends on where the market opens. Like for today, the market opens right at the anchor VWAP and slightly above the 21 and the 9 EMA. And as I'm like short biased, I would like to like get it. I want to focus on the shorts. So the market actually opens at the level that that is quite favored to the short side. So today, I think I took a few entries in the first 15 or 30 minutes after the open. But maybe on the other hand, if the market opens weak, like let's say the market opens flat or even opens lower, then maybe I will wait for the bounce, and in the first 15 30 minutes or even like first 60 minutes to see whether the market can get a bounce into the declining EMAs or maybe the unfilled gap levels. I think sometimes I'm not doing that well for like for sitting out to decide whether I should sit out the first 30 or 60-minute candle. You went to Penang? Yes, I went to Penang and I went to Ipoh. Yeah, I have a really good holiday there. The food are really great. But I'm not a durian fan, so I tried the Ipoh chicken and the laksa and also the bak kut teh. They're all really good. So sad I didn't try the chow kway teow. Uh, I should. I really love Malaysia. Probably gonna revisit it in the near future. The only downside is a little bit too hot and too many mosquitoes. Yeah, I actually tried dim sum in Ipoh. I I personally think dim sum in Hong Kong is a bit better, but I think yeah, but Ipoh's they're also really good. And I saw some dim sum that Hong Kong doesn't have, like the local dim sum with the local. I forget I forget what exactly is that, but yeah. But dim sum in Ipoh is a bit cheaper than Hong Kong. Do you find it difficult to trade during the night? I consider going to Asia, but I don't know if I can handle trading during the night. I think it will be difficult to watch till the close. Like trading it in European hours is definitely, I mean, one of the best time zone in the world. And yeah, but trading in Asia, you probably need to skip the later parts of the trading day, but you can enjoy the like a full day, a full the full daytime. So the market starts at 9:30 at night, so you have a whole day to like to go out and hang around, and then you can come back after dinner. Can you talk more about how you handle leverage and how much you were on leverage across the years and its impact on your equity curve? Um, Actually, I really don't do much. I don't really care if I'm using leverage or not. But because I have defined my risk, after my entry, or even like before my entry, and being in margin or not, doesn't influence how much I'm gonna lose if I get stopped out on this trades or these few trades. So yeah, I doesn't really care on whether I'm on leverage or not, and I think lots of my profits uh came from the leverage, especially when the market is doing really well, because it helps you to build a large positions or have a have a huge exposure when the market really takes off, or when there are a lot of opportunities coming in. And because I'm using a really tight stop and like a really small risking really small, so I can take a, a number of trades at the same time, and still I can kind of manage the risk or the drawdown relatively low compared to the potential upside. Like for example, my average position sizing is around 25%. So at most, if I'm not using any leverage, I can only take maybe like 4 positions at the same time. I think across the previous during the last rally, I definitely at a time I have more than like 10 positions at once, and it really helps to boost my performance. And you can also use your unrealized gains, like when your existing positions are working really well, and you found there are a lot of other names that is setting up, or like like after maybe semis, you got maybe the space names, like the satellites, you got the energy names, or you got maybe the quantum names are setting up. Then you can use your unrealized profits, or like yeah, you can use them to like financial next trades, and you can take more positions and really take the most out of the good market condition. Any tips to avoid watching and focusing too much on intraday time frames? Did you have that issue? Yes, I do. Uh, yeah, because for example, I love watching across different multiple lower time frames, and sometimes they will be a little bit contradicted, or just puzzled you out, because they are like, for example, maybe the 5 minutes looks bullish, but like hourly looks neutral, and the daily is kind of bearish in my opinion. I definitely found it difficult at some point, but um, how do I resolve it? I I mean, I think the higher time frame is the big picture. Like maybe the weekly or like the daily is the big picture. Like for example, semis. If I look at this semi ETF, like weekly, still above the 9 EMA, but we got two huge red candles with some volumes, and we got a huge volume candle like 2 weeks ago. I mean, a few weeks ago, after a strong uptrend. That could indicate like maybe a pause or a deeper pullback, and I think semis needs a little bit more time for the next leg up. And the daily, then the 9 is below the 21, and I think it's a little bit bearish, still above the 50 though. So my opinion on this, on the daily and weekly time frame, is bearish. Then I would look at the lower time frame and see uh can see any maybe like the bearish reversal, or that I will only focus on the short side instead of like buying off the the rising 9 EMA in the 60-minute chart, because it doesn't align with my with my with my view on the daily or and the weekly on the weekly time frame. So actually the context, the big picture matters a lot, and sometimes I would lose track, and yeah, because there are too many information, too many things happening at the same time. But I would always remind myself to focus on the big picture first, and then the lower time frames is the, I don't know, it's the execution. It's more about the execution, and to really find a tight entry for the daily or the weekly opportunities. Palantir is doing really well. All the software names are doing really well. Do you ever used IBD industry rankings in the past? No, I don't. Can you tell us more about logging trades? Do you do it manually or do you have software for it? I do it manually. You mainly use 5-minute candle crossing a pivot like end of VWAP or MAs, and then you put stop just below the breakout candle. Is that your bread and butter entry or anything else? I don't know. I think recently sometimes I don't really like wait for the breakdown for the maybe the 5-minute candle or the 15-minute candle. But yeah, I think, I mean, on the intraday entry, the exact entry, I am a little bit I'm like less systematic, maybe more discretionary in a sense. But I do recommend at first you maybe have a being a little bit more systematic helps a bit more. I think being a little bit more systematic is better for a new trader, because it really reduce your risk of over trading, and it can define your entry much clearer, and like it can help you to determine whether the entry is solid or not. But I think my current approach is I would focus more on the daily and on the intraday, on the precise entry. I'm just going to just find an entry. I don't know, just find an entry with the tight stop. I think that's it. Sometimes I don't even know the similarities between my entries actually, but yeah, sometimes I set my stop at the height of day, sometimes I don't, and but I think they in common they are all on a specific daily levels, like a daily 9 EMA, daily 9 EMA, daily 50 EMA, and the big picture behind is also telling the stock is like, for example, the whole theme is weak or not. The stock here is having relative strength or weakness, or are there any interesting candle, for example, like the huge red candles showing distributions, or a candle with a long upper wick that is also showing a distribution. So I want all the clues lining up, instead of only focusing on the charts or on the candles itself, and on this particular set of rules. So for shorts, do you hold them for a shorter period of time compared to longs, or do you treat them the same? Yes, I do hold them for a shorter period of time. But for example, like RNQ, I think I covered it too early. I covered it on this day, on Tuesday, last Tuesday, and it's like going down for another 10%. Yeah, so generally for shorts, I really I really consider them as a short swings, maybe only a few days, or like for the quantum shorts, I only hold them for like 3 days. And but yeah, maybe I can work a little bit on the short side. Maybe I can like hold them for a little bit longer. But yeah, but right now my approach is like I am treating the shorts as short swings mostly. Maybe not in a bear market or like a really good like swing short opportunities, but I don't think there are many. Markets are gaining some strength, finding some support on the lower time frame, and Q is back above the EMAs. And semi sector as a whole is still kind of weak. Yeah, so I'm just gonna keep the my shorts keep my shorts and let the stops working on their own. Would you recommend beginners sitting mostly in cash in this type of choppy market? Uh yes, but also no. I mean you can avoid making new trades, doing new trades, and avoid getting slapped in both longs and shorts. But at the same time, it's also a great time to observe the price actions across different stocks and see yeah and see which sector is doing better or which sector is doing worse, like the relative strengths and weakness. This is really important. And the second is also when you're not trading, but you somehow like you can in a way of like imagining what you should do when you're in a stock. For example, and when should you enter a stock? I mean, Nepius. If I enter Nepius, if I would like to short Nepius, like for Thursday is definitely the best day because like the price gradually drift lower and following the declining 9 EMA. So like first day is a good entry. So how can I spot this entry next time? Maybe because the declining 9. So it finds resistance at the declining 9, and the 9 is below the 21. So it could be one of the uh one of the reason that you or one of the spots the entry spot that you should focus on next time. And so let's say if you are shorting Nepius since Thursday, and on Friday it actually opens weak, but gradually reclaiming the lower time frame CMAs and reach the higher parts of the previous candle, like the near the high of your entry. But it never stops you out if you're setting a stop at the high of day. And then you got a Monday, we got a weakness, and then and today we also got a strong open and a fake out, or like trying to break out from the declining 9 or the 60-minute 50 EMA, but eventually it's now fading. So if you're shorting on Thursday, you shouldn't, or like even when the market looks strong, like there's a strong open, a strong bounce, but actually you shouldn't cover it. And doing it like an imaginary trade like this helps you to really manage your trades when you're actually in it. You're not going to like panic sold or panic buy from your real trades when you're really holding a stocks, holding a position. So not seeing much to do right now, and uh, this is the end of today's stream, and we'll see how how the market and the shorts that I'm holding close today. So I think the close did matter. Yeah, I think it's a challenging market, and it's pretty polarized. Like some stocks is doing really well, but some are looking really weak. So I don't know. We'll see. So thank you guys for coming, and we'll see you in the next one.